Hello everyone. In today's video, we are going to see the amalgamation in corporate accounting. In this amalgamation, we are going to see one problem. Here in this problem, A Limited and B Limited have agreed to amalgamate. A new company, AB Limited, is formed. And they will, that is over the combined concern as on 31st March 2018. The balances of the two companies have been given, that is liabilities and assets information have been given, and some more information also given, like for every 20 shares in A Limited, that is selling company, will get 21 shares in the new company, and 5 shares of B Limited will be issued, 6 shares of 10 each in the new company. Okay, so this is some information relates to, that is purchase consideration amount they are going to get. So for that amount, they will be issuing some shares in the new company. Let's see how we'll calculate the purchase consideration. So here net assets method have been followed. From assets we have to minus liability, will be getting the purchase consideration amount. And here for A Limited, total assets comes to 11,30,000, and from that you want to minus the creditors, that is that amount comes to 80,000 rupees, and the net that is what we can say here, the purchase consideration for A Limited is 11 lakh 10 lakh 50,000. 11 lakh 30,000, you want to minus 80,000, you'll be getting 10 lakh 50,000. And for B Limited, total assets comes to 6 lakh 50,000. From that, you want to minus the creditors, 50,000, you'll be getting 6 lakhs as purchase consideration. Okay, so 10 lakh 50,000 for A Limited and 6 lakhs for B Limited as purchase consideration they are going to receive from AB Limited. And here, next step, we have to prepare the notes to account. Before that, and one information relates to the shares which they are going to receive in the new company is also given. So in that, what they have told, that is for 20 shares in the old company, they will be getting 21 shares in the new company. That means already A Limited, they have 1 lakh shares. So for that, they will be getting 1 lakh 5,000 shares in the new company. So 1,05,000 plus, and for B Limited, how much they are going to receive in the new company? For 50,000, that is for 5 shares, they are in existing company, and they will be getting 6 shares in the new company. So if they will be having already 50,000 shares, then they are going to receive 60,000 shares in the new company. So for A Limited 1,05,000 and for B Limited 60,000, total comes to 1,65,000 shares into 10 each comes to 16,50,000. And coming to reserve and surplus. So in our balance sheet, one more information relates to reserve and surplus. For reserve fund, it's given in B Limited, it is 50,000, and for surplus account for A it is 50, and for B it is 50,000. Okay, so reserve and surplus total comes to 1,50,000. But this amount has not been shown in the new balance sheet. Why? Let's see. That is, total purchase consideration amount comes to, for A it is 10 lakh 50 and for B it is 6 lakh. So total comes to how much? 16 lakh 50,000. So this 16 lakh 50,000, what is the source here? So first they will take from the existing company share capital, and that share capital is not sufficient. Then they will go for reserve and surplus. So in this problem, they have in the existing company, for A Limited it is 10 lakhs and for B Limited 5 lakhs. Total comes to 15 lakhs. But that amount is not sufficient because total consideration is 16 lakh 50,000. So that 1.5 lakhs they will be utilizing from the reserve and surplus account of A and B Limited, that is existing companies. So in that aspects, entire amount of reserve and surplus have been utilized for the purpose of settlement of the purchase consideration. So that amount has been nil in the new balance sheet. Okay, and coming to the third item, current liability. So current liability, creditors of A, B, it comes to 1,30,000. And coming to tangible assets, land and building for A and B, it is 8 lakhs, and plant and machinery A and B, it is 4,50,000. And coming to intangible assets point of view, goodwill 50,000, patents from A Limited, it is 1,10,000. And current assets, stock, debtors, cash and bank, that is together of A and B limited comes to 3,70,000. Coming to the balance sheet of AB limited, first equity and liability, note number 1, amount. So first equity and liability under that share capital, note number 1, amount comes to 16,50,000. Then reserves, we should we can show only nil because already it has been utilized for the settlement of purchase consideration. And next information, non-current liability in this problem is nil. And current liability only creditors, that has been note number 2, 1,30,000. And next one, assets point of view. So liability point of view only 16,50,000 plus current liability 1,30,000. So the total comes to 17,80,000. And coming to asset point of view, tangible assets 12,50,000, intangible assets 1,60,000, current assets 3,70,000. Total comes to 17,80,000. So in this way, we have to prepare the calculate. That is, we can calculate the purchase consideration. Next step, before preparing the balance sheet of the new company, we have to prepare the notes to account. After that, we can proceed for the balance sheet of new company. So in this way, we have to prepare the amalgamated balance sheet of the company. I hope you all understand today's problem. We can see some more problems in the upcoming video. If you like this video, share and subscribe with your friends. Thank you.